All right, let's jump into another deep dive. This time, we're tackling a listener request.
Oh, excellent.
Yeah, they want to understand some interesting investment recommendations that they came across.
Okay.
All from this article titled
Okay.
Les fonds actions incontournables et un ETF bonus pour un portefeuille solide.
Ooh la la.
Yeah, so we're going to unpack what makes these picks tick and why they might be worth, at least considering for your portfolio.
Awesome.
Yeah, so basically it looks like they're interested in building, a strong foundation
Right.
with a mix of growth potential, dividend income, and, stability.
Yeah, that's smart.
Yeah, and it seems like the article's kind of pointing them in that direction, too, with,
Yeah.
a mix of tech, healthcare, real estate, and even a broad market ETF. Just figured measure.
For good measure, right.
Yeah.
You got to have that.
Okay, so right off the bat, we're seeing that diversification angle coming through,
Absolutely.
which, as we all know, is key to managing risk in any portfolio.
Absolutely.
But let's get into the specifics.
Okay.
Starting with,
Yeah.
Amazon. Everybody knows Amazon, right?
Sure.
But this article highlights something that completely blew my mind. Their free cash flow.
Yeah.
Apparently, it's gone from around, $12.4 billion in 2020
Wow.
to almost $48.4 billion now.
Oh my gosh.
How
That's
is that even possible?
incredible growth, especially for a company that large like
Yeah,
Amazon.
I know.
But you know what's really interesting is this isn't just a story about online shopping anymore.
Right.
I mean, sure, e-commerce is a huge part of their business,
Right.
but they've been strategically diversifying into other areas like cloud computing
right.
with Amazon Web Services.
AWS.
Or AWS, yeah.
Yes.
That's been a real game changer for them.
So it's like they're building multiple engines for growth
Mm-hmm.
within the same company?
Exactly, and they're not stopping there.
Right.
They're also pushing into subscriptions with services like Amazon Prime, which
Right.
has become almost indispensable for so many people.
It really has.
And they're making big moves in artificial intelligence,
Oh, wow.
which we'll talk about more with our next recommendation.
AI, that's definitely a hot topic right now.
Yeah.
And speaking of which, our next pick is Alphabet,
Okay.
Google's parent company.
All right.
Now, what caught my eye here is that they've taken a very different approach
Okay.
to developing their AI capabilities.
Right.
They're not relying on acquiring other companies like some of their competitors are.
Yeah.
They're building it all in-house.
Interesting.
So what's the significance of that?
Well, I mean, it suggests that Alphabet is playing the long game with AI.
Okay.
You know, they're not just looking for quick wins or trying to catch up.
Right.
They're investing heavily in building a deep understanding of AI and integrating it into their core businesses.
Yeah.
Which could give them a significant advantage in the long run.
Wow.
And we're already seeing that strategy pay off.
Yeah.
Their stock has climbed about 27% in the past year.
That's impressive.
Yeah, it is.
And here's something else that caught my eye about Alphabet.
Okay.
They've actually started paying dividends.
Oh, interesting.
Yeah. For a company known for its growth.
Yeah.
That's a pretty interesting development, wouldn't you say?
It is.
Yeah.
It shows that they're becoming more mature as a company.
Okay.
And they're starting to think about rewarding their shareholders in a different way.
Right.
Not just through stock price appreciation.
Right. Right.
And for long-term investors who are looking for a combination of growth and income,
yeah.
that makes Alphabet even more appealing.
Okay, so we've got like a booming tech giant
Yes.
and a powerhouse that's starting to focus on dividends too.
Absolutely.
Now let's shift gears a bit
Okay.
and talk about Abby,
Okay.
a company that really caught my attention because of its dividend track record.
Okay.
They're considered like a high-yield dividend stock.
Yeah.
But here's the thing. They recently lost the patent
Oh.
on their blockbuster drug Humira.
Right.
This could have been a huge blow,
Yeah.
but they seem to be navigating it pretty well.
Wow.
So how are they doing that?
Well, Abby recognized the risk of relying too heavily on a single drug,
Right.
even a blockbuster like Humira. So they've been proactively diversifying their portfolio,
Okay.
investing in research and development to create new drugs
Okay.
and acquire promising companies.
So diversification coming into play again,
Mm-hmm.
but this time within the pharmaceutical industry itself.
Precisely.
Okay.
And it's paying off.
Oh, wow.
AbbVie's dividend yield is currently sitting at an attractive 3.4%.
Wow, that's pretty good.
And they've been growing those dividends at an average rate of 7.5% over the past 5 years.
Jeez.
So that kind of consistency is very attractive to income-focused investors.
That's impressive.
It is.
So they're showing that even in the face of like a major patent cliff,
Right.
strategic diversification can really make a difference.
Absolutely.
Okay, now for our next pick.
All right.
Let's move from the world of medicine to the world of real estate
Oh, okay.
with Prologis. You
Prologis.
might not be as familiar with this one,
Okay.
but it's a fascinating company that's perfectly positioned to benefit from a trend we've all been witnessing, the unstoppable rise of e-commerce.
Oh, for sure.
Essentially, Prologis is the landlord for e-commerce giants.
Exactly. They are the largest REIT,
REITs.
or real estate investment trust, in their sector.
Okay.
And they specialize in logistics, real estate.
Logistics.
Think
Okay.
warehouses, distribution centers, fulfillment centers,
Gotcha.
the kind of infrastructure that's absolutely essential for companies like, well, Amazon,
Right.
to get their products to consumers quickly and efficiently. And guess who their biggest tenant is?
Let me guess. Amazon.
You got it. So as e-commerce continues to grow,
Yeah.
Prologis is right there riding that wave.
Smart.
They're seeing strong demand for their properties, which translates into rental income
Yeah.
and ultimately dividends for investors.
But haven't REITs been facing some headwinds lately with rising interest rates?
That's true.
Yeah, I've heard that can impact their performance.
Yeah, REITs are sensitive to interest rates.
Okay.
But Prologis has some strong fundamentals that are helping them navigate this environment.
Okay.
They have a solid 3.2% dividend yield,
Okay.
and they've been consistently growing those dividends.
So they're doing all right.
They're doing all right.
Okay, so we've got a diverse mix so far.
Yeah, we do.
We've got Amazon with its incredible growth,
Yes.
Alphabet venturing into dividends,
Uh-huh.
AbbVie Provision, the power of diversification in pharma,
Right.
and Prologis riding the e-commerce wave.
Yep.
But there's one more recommendation to unpack.
Okay.
And this one takes a different approach.
Right.
It's not a single company, but an ETF.
Okay.
The Schwab U.S. Dividend Equity ETF, also known as SCHD.
SCHD. All right.
Now, this ETF offers a way to instantly diversify your portfolio
Right.
across a basket of quality companies with a history of paying dividends.
Yeah, that's a good one.
It's an excellent alternative to, like, tech-heavy ETFs,
For sure.
especially if you're looking for a more balanced approach.
Absolutely.
What makes SCHD stand out from other dividend ETFs?
Well, it focuses on quality companies with a strong track record of paying and growing their dividends.
Okay.
And instead of being heavily concentrated in tech,
Yeah.
it spreads its investments across a range of sectors like finance, healthcare, consumer staples, and industrials.
Oh, wow.
That provides a more stable foundation for your portfolio.
So it's like having a team of dividend all-stars working for you.
Exactly. And SCHD has a lot of fans.
Oh, yeah.
It has over $70 billion in assets under management,
Wow.
which is a testament to its popularity.
That's huge.
And what's really interesting is that it has historically outperformed the S&P 500 during market downturns.
Really?
Yeah.
So it's like a little bit of a
Yeah, it's kind of a safe haven
safe haven.
when things get a little rocky.
That's a really compelling argument
Yeah.
for including an ETF like SCHD
Mm-hmm.
in a diversified portfolio.
Absolutely.
So what we have here is like a really interesting mix
Yeah, we do.
of individual stocks and an ETF,
Uh-huh.
all offering different ways to potentially grow your wealth.
For sure.
But before we go any further,
Okay.
I think it's important to kind of take a step back
Yeah.
and really understand what makes these recommendations so compelling
Okay.
for building, a strong investment portfolio.
Right.
What are the key takeaways here?
Yeah.
What should our listener be focusing on
Right.
as they consider these options?
Yeah, you're right.
Yeah.
It's not just about the individual companies or
Right.
even the ETF.
Yeah.
It's about understanding the bigger picture
Okay.
and how these recommendations can fit into a well-constructed portfolio strategy.
I'm all ears.
All right.
Let's unpack that in our next segment.
Sounds good.
All right. So we've laid out these 5 investment recommendations:
Right.
Amazon, Alphabet, AbbVie, Prologis, and that SCHD ETF.
Yep.
But what's the common thread here?
Yeah.
What makes these picks stand out from the thousands of other stocks and ETFs out there?
Well, I think one of the most compelling aspects is that each of these recommendations kind of tells a unique story.
Okay.
They're not just about chasing the latest fads
Right.
or jumping on the hottest trends.
Yeah. Yeah.
It's more about understanding the underlying forces that are shaping the future.
Right.
And identifying companies that are well positioned to benefit from those forces.
Okay. I love that idea of investing in a story.
Yeah,
It makes it so much more engaging than just looking at numbers on a spreadsheet.
absolutely.
So let's dive into some of these stories.
Yeah.
Take Amazon, for instance.
Right.
We all know them as the e-commerce giant,
Right.
but their growth story goes way beyond just selling stuff online.
Mm-hmm.
Their expansion into cloud computing with AWS has been nothing short of remarkable, hasn't it?
It really has. And, when we talked about that incredible free cash flow growth earlier,
Yeah?
a huge chunk of that is coming from AWS.
Wow.
They've become the dominant player in cloud computing,
Really?
providing the infrastructure that powers so many businesses around the world.
Wow.
So that's a pretty powerful story to be invested in.
It is, and it seems like they're constantly innovating and expanding into new areas,
Right.
like we talked about with their push into artificial intelligence.
Yeah, for sure.
Now, when it comes to AI, Alphabet's story is equally fascinating,
Hmm.
but for different reasons.
Right.
What intrigues me about them is their decision to, like, build their AI capabilities from the ground up
Yeah.
rather than relying on acquisitions.
Interesting.
It just seems like a really long-term
It does.
strategic approach, doesn't it?
Yeah, and it speaks to their confidence in their own ability to innovate.
Right.
They're not just buying their way into AI, they're
Yeah.
building a deep understanding of it within their own ranks.
Right.
And that kind of commitment can lead to some really groundbreaking advancements down the line.
Absolutely. And then there's that intriguing shift toward dividends,
Yeah,
which is like a whole new chapter in Alphabet's story.
it is.
It suggests that they're mature as a company
Hmm?
and recognizing the value of rewarding shareholders with both growth and income.
Exactly. They're dealing to a wider range of investors now.
Right.
Those who are seeking a more balanced approach.
Right, right.
Yeah.
Speaking of balance, let's talk about Abby.
Okay.
They're facing like a pretty significant challenge
Right.
with the loss of their Humira patent.
Yeah, that was a big one.
But what's inspiring about their story is their proactive approach to diversification.
Mm-hmm.
Like, they didn't just sit back and wait for the patent cliff to hit.
Right.
They actively invested in building a more diverse portfolio of drugs.
And that's such a crucial lesson for investors.
Oh, yeah.
It's about understanding that even the most successful companies
Right?
can face headwinds.
Yeah.
And it's how they respond to those challenges that really matters.
Right, right.
AbbVie's commitment to diversification,
Yeah.
it's testament to their management team's foresight
Okay.
and their ability to adapt to, changing circumstances.
It's also a great reminder that diversification isn't just about spread your investments
Right.
across, different companies or sectors.
Yeah.
It can also mean diversifying within a specific company's
Right.
product portfolio or business lines,
Exactly.
like AbbVie has done.
Yeah. Diversification can take many forms.
Right.
And it's about finding the right mix for your own investment goals and risk tolerance.
Okay, now Prologis might seem like a different kind of story altogether.
Yeah.
They're not a tech giant or a pharmaceutical powerhouse.
Right.
But they've positioned themselves brilliantly
They have.
to capitalize on a trend that's transforming the way we live and shop,
Mm-hmm.
e-commerce.
Yeah.
As the largest player in logistics real estate,
Mm-hmm.
they're providing the infrastructure that makes e-commerce possible.
Right.
And that's a story that's only going to get bigger, wouldn't you say?
It is, and what I find fascinating about Prologis is that they're not just passively riding the e-commerce wave.
Right.
They're actively shaping it
Oh.
by developing innovative logistics solutions
Okay.
and partnering with companies like Amazon to optimize their supply chains.
So they're not just providing the space.
Right.
They're also providing the expertise
Mm-hmm.
and the technology to make e-commerce more
Yeah.
efficient and effective.
Exactly. And that's a valuable differentiator in a competitive market.
And finally, we have the SCHD ETF.
Right.
Now, ETFs are a different beast altogether.
They are.
They're not about investing in a single company's story,
Right.
but rather investing in the basket of companies that share certain characteristics,
Yeah.
like, a focus on dividends,
Right.
in the case of SCHD.
Right.
So what's the appeal of this particular ETF story?
Well, SCHD offers investors a way to instantly diversify their portfolio across a range of high-quality dividend-paying companies.
Right.
And it does so with a focus on stability and long-term growth.
Okay.
It's like building a diversified dividend portfolio in a single trade.
So in a way, it's like investing in a story of collective strength
Mm-hmm.
and resilience.
Absolutely.
A story of companies that have proven their ability to, weather storms
Yeah,
and reward shareholders with consistent income over time.
that's a great way to put it.
Yeah.
And what's particularly appealing about SCHD
Yeah.
is that it has historically outperformed the S&P 500 during market downturns,
Really?
which suggests that it could offer some downside protection in a volatile market environment,
Sure.
which is something that a lot of investors are looking for right now.
That's a really compelling point.
Yeah.
It seems like CHD could be a valuable tool
Mm-hmm.
for investors who are seeking a more balanced
Right.
and risk-aware approach to investing.
Absolutely.
Okay, so we've explored these fascinating stories
Yeah.
behind each recommendation.
We have.
But how do they all tie together?
Yeah.
What's the key takeaway here?
I think one of the most important takeaways is that building a solid investment portfolio
Hmm.
isn't just about picking winning stocks. It's about, understanding the underlying trend that are shaping the future,
Okay.
identifying companies and ETFs that are well positioned to benefit from those trends,
Yeah.
and diversifying your investments
Right.
across a range of different stories.
That's a fantastic insight. And it seems like these recommendations offer
Yeah,
a really interesting mix of stories,
they do.
from like the explosive growth of Amazon
Right.
to like the stability of SCHD.
Absolutely.
But what should our listener consider as they decide
Right.
which of these stories to invest in?
Yeah, that's a good question.
What are the key factors to weigh?
Well, that's where things get really interesting because each investor has,
Okay.
their own unique goals, risk tolerant, and time horizon.
Right, right.
And those factors will play a big role in determining which of these recommendations are the right fit for them.
So it's not a one-size-fits-all approach.
Exactly.
It's about finding the right fit for your
Mm-hmm.
individual circumstances.
Exactly.
Okay, so that's where we can really dive deep and help our listener understand how to evaluate these recommendations
Right.
in the context of their own investment journey.
For sure.
Let's do that. Let's move from the big picture to the individual level
Okay.
and talk about how to assess these recommendations based on like personal goals and risk tolerance.
Let's do it.
Okay, so we've explored the stories behind these recommendations
Right.
and how they kind of fit into like the bigger picture
Yeah,
of building a diversified portfolio.
absolutely.
But now let's get down to like brass tacks.
Okay.
What should you, the listener,
Right.
be thinking about as you consider these specific investments?
Well, as we touched on before, it all starts with like your individual goals
Right.
and risk tolerance.
Yep.
What are you hoping to achieve with your investments? Are you looking for like aggressive growth, consistent income, or a balance of both?
Yeah.
Like how much risk are you comfortable taking on?
So if someone's really focused on growth
Yeah,
and is comfortable with like a higher level of risk,
right.
would companies like Amazon or Alphabet be a good fit?
Potentially,
Yeah.
Amazon, with its dominance in like e-commerce and cloud computing,
Right.
certainly has a high growth trajectory.
Right.
And Alphabet, with its innovative approach to AI and
Yeah.
its expansion into new markets,
Yeah.
also offers significant growth potential.
Okay.
But it's important to remember that high growth often comes with higher volatility.
Right.
These
Yeah.
companies are constantly pushing boundaries and disrupting industries,
Yeah.
which can lead to big swings in their stock prices.
So a more cautious investor
Yeah,
might want to lean towards something a little more stable,
right.
like AbbVie
AbbVie, yeah.
or the FCHD ETF.
Yeah, that's a possibility.
Yeah.
AbbVie, with its focus on dividends and its diversified portfolio of drugs,
Right.
could provide a more consistent stream of income.
Okay.
And the SCHD ETF, with its like broad diversification
Yeah.
across quality dividend-paying companies,
Right.
offers a way to smooth out the ups and downs of the market.
Okay.
But even with these like more conservative options,
Yeah.
it's important to do your due diligence
Right.
and understand the risks involved.
What about Prologis?
Prologis.
Yeah, where would that fit in?
Prologis is an interesting case
Okay.
because it offers exposure to a very specific sector, logistics, real estate.
Okay.
This sector is benefiting from the growth of e-commerce, which is like a powerful long-term trend.
Right.
However, as we discussed,
Yeah.
REITs can be sensitive to interest rate fluctuations.
Right.
So that's something to consider.
Right. Okay.
Prologis might be a good fit for an investor who's looking for like
Yeah.
a more niche opportunity
Okay.
with the potential for both growth and income,
Okay.
but who's also comfortable with like a slightly higher level of risk.
So it's not just about like growth versus stability.
Right.
It's also about considering your comfort level
Yeah,
with different sectors and
Yeah.
how those sectors might perform
Right.
under different economic conditions.
precisely. And don't forget about your time horizon.
Oh, right.
How long are you planning to invest? If you're investing for the long term,
Yeah.
you might be more comfortable with some volatility along the way.
Right.
But if you need access to your money in the short term,
Right.
you might want to focus on more conservative options.
These are all such great points.
Yeah.
So it sounds like the first step is really getting clear on your own.
Right.
Investment goals, risk tolerance, and time horizon.
Exactly.
And then you can kind of start to evaluate these recommendations
Yeah.
and see which ones like align with your
Align with your needs.
individual needs and circumstances.
For sure. And there are plenty of resources available to help you do that.
Oh, yeah.
You can read company reports,
Okay.
research industry trends, and even use online tools to
Yeah.
analyze different investment scenarios.
And, I think it's important to remember that investing isn't
Yeah,
like a one and done kind of thing.
right. It's a journey.
It's an ongoing process of learning, adapting,
Absolutely.
and refining your strategy as you go.
Couldn't agree more. The market is constantly evolving.
Right.
And so are your circumstances.
Yeah.
It's about staying informed, being open to new ideas,
Yeah.
and always being willing to adjust your course as needed.
So we've given you a lot to think about today.
We have.
We've explored these 5 intriguing investment recommendations,
Yeah,
delved into their stories, and discussed how to evaluate them based on your individual goals and risk tolerance.
absolutely.
But where do you go from here?
Yeah.
What's the next step?
Well, I would encourage you to, take some time to really digest this information,
Okay.
reflect on your own investment goals
Right.
and risk tolerance, do some more research on these companies and the ETF,
Right.
and then start exploring how they might fit into your portfolio.
I love that. It's like we've given you the ingredients
Right.
on the recipe,
Yeah,
but now it's your turn to get in the kitchen
exactly.
and start cooking up your own investment masterpiece.
That's a great analogy.
Uh-huh.
And remember, there's no one right way to invest.
Right.
It's about finding the approach that works best for you
Right.
and your individual circumstances.
So, listeners, we've given you the roadmap,
Yes.
the tools, and the inspiration.
Absolutely.
Now it's your turn to take the wheel
Take the wheel.
and embark on your investment journey.
Happy investing, everyone.
Happy investing.